Hey guys, so we are back again with our Reit series. For this video, I want to drill in on dividends because a lot of you have been asking how will Reit's dividends fare up against all of the other stocks in the market. So if you want to know more about Reit's, if the dividends is worth it, if they have income, how is the income, how will this be for you as an investor, check this video out. Hey guys, so we're back again with our deep dive on a REIT. As you all know, this is the first REITs that will be listed in the Philippine Stock Exchange. That's why there's a lot of excitement. But above and beyond the excitement, the reason why we're doing a deep dive on this, so that you know what you're getting into, you don't get swept away by all of the talk that you buy based on information, based on data, and if it's something that fits you, fits your style, fits your strategy, fits your risks also, so that you just don't buy because people are telling you to buy or everyone else around you is buying. You buy based on your plan. As you all know, when you're investing in a REIT, you're investing in property. You're not just investing in the business, but the business itself is earning from rental property. So I would like to talk about the value of the assets itself under the property, its rental business, the A REIT, the companies inside or the properties inside the A REIT actually grow, then some profit projections of a REIT, then everyone's question, the dividend, then its reinvestment plan. Please do note also, and I've been saying this over and over, all of this information that I'm sharing to you, they're partly my interpretation of it, my strategy and my style on how I analyze it. But all of this are available from the prospectus of a REIT and also all of the financial information that they have disclosed. I posted about a REIT prior to this, so you have a general context. I'll put the link in the description below. They're also popping up here. And if you don't know what a REITs is, or you want to know a bigger and deeper detail on what a REITs is, I'll also put that in the description. You can also watch that after watching this video. I think we have more than 10 videos already on a REIT to give you the proper understanding of what it really is, the pros and the cons. And as I continue to share and give you a deep dive on a REIT, please remember there's no such thing as a perfect investment. Each investment has its own pros and cons. Each investment has its own errors, its own follies, its own compared to other investments. There might be other investments that might give you better returns also, but there might be other investments with lesser return that may also fit you, because it's not about investing in the one that gives you the most return. It's investing in an asset that is aligned with your financial goal, with your financial plan, and the risks that you're willing to take. So the context, by the way, in all of this is, please remember that a REIT is, as part of the law, they should distribute 90% of their income in a form of dividend. So if you know and you know how the business is creating recurring revenue from rentals, then it would give you a conviction and a strategy that could possibly help you to know if this is something that's worth buying into and holding for the long term. There's 3 concepts that I'd like you to remember about the A-REIT. 3 concepts. Comment below. Say 3. Say 3 concepts. What are those 3 concepts? For A-REIT, basically, it's a stable return. Second, the A-REIT is categorized by something that they're only putting in and listing assets that are in key locations. That's why for the 3 buildings that they have, the 3 of them are in Makati, the 4th one is in Cebu. Cebu, as you all know, in terms of economy, outside Metro Manila, it's one of the biggest economies that we have in the Philippines as well. So stable return, key location. Number 3, commercial and business areas. The things that they're listing there should be assets that primarily are into commercial and business spaces. So you won't see a hospital, a warehouse, or a mall in it. Those are the 3 characteristics of the A-REIT, and I'll drill in more about that later, because again, as you all know, while we're filming this video, we are still in the midst of a pandemic, and a lot of people are a bit hesitant on how the economy will be and how businesses will run, since A-REIT is primarily real estate, and real estate is one of the most hit. And since people are asking, what if companies close down? If companies close down, what's gonna happen to the properties that are renting there, or to the businesses that are renting there? By the way, also from Riyadh, Saudi Arabia, his name is Leo Romeo Makalalig. His question is, hi Sir Marvin, I'm a big fan from Riyadh. I started watching your channel since late 2019 and I must say I'm really impressed. Thank you for giving your time to share and educate us. Thank you for making a series on A-REITs as well. I just want to know more about the dividends of A-REITs, and as a dividend investor, if you have any additional information about the company, that would be amazing. So thank you, Romeo, for sending that. Sakto, that's what we're going to discuss in this video. And if you guys also have a question, please do put it in the comment section below so that we can I'll try my best to make a video off of it if I have not made a video yet based on the questions that you are asking, or if it's a very, very personal question, feel free to slide a DM on IG. Let's continue. I mentioned that we're going to start with the value of the property because it's very, very important to know what the value of the property is, since essentially when you're investing in REITs, you're investing in assets that produce real estate / rental income. So the value of the property also will give you an inkling if the company that you're investing into is either cheap or expensive by knowing the price or the value of the assets underneath it. This is something that again you can also see from the prospectus, but the value of the properties that are there is around 30 billion pesos, and it's something that was appraised by a third party. It's not something that Ayala said, oh, this is the value of the building. Now, as what I've mentioned, there's 3 buildings currently because as you all know, they will use the money from the listing to buy the 4th building. The 3 buildings that are currently part of the REIT is Solaris 1, it's worth 12 billion pesos, Ayala North Exchange, which is worth 16 billion pesos, and McKinley Exchange is 2 billion pesos. For those who are not from Makati but they pass through EDSA daily, McKinley Exchange is the one that you see in front of the old Intercon Hotel, or at least close to the Intercon Hotel. It's Ayala Corner EDSA, that particular small space, and it's not even a tall building, it's around 2 billion pesos. And you can also peg a benchmark for it. That's why Solaris 1 and Ayala North Exchange is priced at a much higher valuation. So Solaris 1, 12 billion, Ayala North Exchange, 16 billion, McKinley Exchange, 2 billion pesos. Comment below if you're learning, comment below if this is something that is helping you. Let's look at the rental business. What I wanted to mention, and this is something that struck me as I started to analyze the prospectus that they had, a large chunk of people, companies renting from them, 66% of their income come from BPOs. Now, the reason why I keep saying that and I keep hammering that is because BPOs are one of the least affected from all this coronavirus lockdown pandemic thing that has been happening over the past few months. They can't really do a lot of work from home, especially of the data that they're processing, something that's confidential. And please do note, since they're in the BPO industry, one of the things that's so important for them is the speed of the internet, and it's hard for some areas or some people who are working in areas where their internet is not so fast. So the reason why I say that is if this pandemic drags on, the BPOs in the Philippines will be relatively resilient as compared to the other industries in the market. The top 10 tenants in the rental business as of 2019 gave them 74.4% of the revenue. So large companies renting in them has a big slice already on the revenue. It can go both ways also though. Please analyze this, that if they leave, those 10 tenants leave, then they lose 74.4% of their income already. But please remember, if they just maintain those 10 tenants, it already comprises 74.4% of the revenue as of 2019. Now, as of the first quarter of 2020, the top 10 tenants gave them 78%. Now, the reason why I'm saying that is this. There's something that they place in the prospectus. It's called weighted average lease expiry, and this is their disclosure as of May 30, 2020. The weighted average lease expiry is 5.84 years. What does that mean? If you average the lease of their tenants and the tenure of it, their lease, when you average it, is at 5.84 years. Meaning, those top 10 tenants and majority of the ones renting from them are in it not just for the next 6 months, but they're in it for a very, 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 very long times. So I repeat, the weighted average lease expiry from their tenants is 5.84 years as of May 30, 2020. This is a very, very long time. Here's the thing, and this is something that will protect a REIT as a company and you as a potential investor. Since the weighted average lease is 5.84 years, should the company leave and pre-terminate the rent, there's a very, very steep penalty for those companies or for those tenants. So the rates are fixed across the board, and it's in the best interest also of the company to stay so that they don't pay a hefty fee when they pre-terminate the rent. Please remember the data that I'm saying also, they're measuring it on years that there was no coronavirus. As you all know also that things will relatively change because of the coronavirus, but rental rates in the Makati CBD for grade A offices have a CAGR of 6.5%. So it's growing at 6.5% across the years in non-corona years. We don't know what the future will hold. We don't know how it will be in the next few years because of this pandemic, but that's where we are from its rental business. So, are you learning? I hope you are. Comment below if you're learning. But what we've talked about so far is the value of the property, its rental business. Now I want to talk about the growth of the Areit. I said this on the previous video that the two buildings are 100% occupied and then their third building is 90% occupied. That looks good on paper. That looks good in reality because you know that there's passive revenue coming in. But in the same way, when you look at it, since you're already almost full, the capacity for them to grow is maxed out. You can't look at it from that perspective because the current ones are already almost maxed out. If they fill the other one that has 98% occupancy, then it won't really give you a much boost in terms of growth or in terms of earnings. And just to also share, some of the REITs that I've tried to analyze also, especially in the Singapore markets, the ones that are listed there, because that's where I have exposure, majority of them also don't have growth. Their earnings are relatively flat. The reason why I'm saying that is basically this. The upside that you can get from a REIT is if they raise rent. I've said this in the previous video. The range for raising rent is around 3 to 10%. Again, it will also be dependent on what the current market conditions are at those specific years. And again, years closest to the coronavirus, rental rates may not really grow as high. But if you're holding this for a very, very long period of time, on year 7, on year 10, people would have forgotten already what's happening right now. So I believe rental rates would continue for the long term in terms of its growth, especially to where the A-REIT buildings are. Grade A, Makati CBD, or for the one in Cebu, close to the business districts and part of the larger economic growth hubs in the country. Next, let's talk about its profit projection, and you will see this straight from their prospectus. It's very, very straightforward. They have a projected rental income of 1.7 billion pesos. And the reason why I'm saying that, because it's the basis for the dividends that they will give. Please remember, 1.7 billion pesos of rental income, then you just take 90% of the net income, that will be the dividends. Now, let's go straight. Dividends. The dividends that they have projected for 2021 is pegged at 1.58 pesos. I repeat, the projected dividends for 2021 is at 1.58 pesos per share. And I don't have a video yet mentioning this, but the listing price, the final listing price for the Areit will be pegged at 27 pesos per share. Assuming a listing price of 27 pesos per share and a projected dividend of 1.58 will give you a dividend yield of 5.85%. So please, as you start to compute that, that's still better than majority of the bonds that are coming out right now, especially right now when rates are so low, especially right now also when a lot of the common shares won't be giving really attractive dividends, especially also right now that for sure some of the preferred shares won't be this high, considering that we are in a low interest rate environment. Please remember, when a REIT will be in the market already, there will be some volatility, meaning there's a potential for the stock to go up, there's also a potential for the stock to go down. Should the stock go down by 10% and the stock will drop to 24.3, if the stock price go down and you buy it and they still maintain the dividend that they would give, your yield would go higher. Your dividend yield would go up to 6.5%. Now, on the flip side, if the stock price would go up by 10%, meaning the stock would move from 27 to 29.7%, the yield will drop to 5.32%. Now, given that the yield will drop to 5.32%, you can make still a decision just in case you don't get the full allocation that you want. Kunyari, you wanted to get this much shares, na allot lang sa'yo kalahati. As you wanted to buy again, the stock price was already higher, assuming it went up, it would go up by 10%. to around 29.7%, the next question that you should ask yourself is 5.32% enough for me? If the answer is yes, then go ahead, buy it. If the answer is no, then you don't have to buy it. At the end of the day, if you're after dividends, it will all be predicated on what you're comfortable on. It will all be predicated on the dividend that you actually want, because at the end of the day, you don't have to compare with what other people's opinions are. You just have to compare it if it fits your goal. But essentially, you can peg the dividend yield as of the 27 peso price to range around the 5.6%. So are you learning? Comment below if you are. Comment below if you like it. Comment below if you like the Areit. I've been getting a lot of questions from a lot of people to compare Areit and the Double Dragon REIT. If you want me to compare them, put it in the comment section, and then, like what we're doing here, we're gonna make new videos on top of that. Lastly, a lot of people have been asking, what is Ayala Land gonna do with the money? Please remember, I mentioned this, I think, on the first video, that portions of the REIT, Ayala Land will be selling their shares, and another portion they would be generating and creating new shares for it. What does that mean? Since Ayala Land will be selling their shares, a portion of the earnings from the listing would be going to Ayala Land. And you can just go to the prospectus. I'm not listing it here anymore for the exact details, but the reinvestment plan for this is they would be putting the money in their malls, offices, hotels, and warehouses. So it's spread across different projects, some which are just about to start, launching pa lang, and some that are already being constructed by the time this video is being made. I don't think you can expect this to be like Mary Mart, that it would go on ceiling on day one, for the very reason that the market cap is very, very big. But no one has a crystal ball to forecast how the market will be. Just to manage your expectations, given that the market cap of this is much, much bigger than the market cap of Mary Mart, I'm not sure if it will go that way. But what I can say of this, and my comment on this, are these three things: stable return, key locations, commercial businesses. It's a proxy for you as compared to buying your own condo, having it rented out, looking for a tenant, getting a broker, managing it, maintaining it. And this one will give you, at this very point in time, 5 to 6% return based on the price and the dividends that they have projected. So at the end of the day, I'll say this over and over, the choice is yours. Do not buy or avoid the stock just because a stock trader in YouTube who's so passionate about this would discuss it. You have to do your own due diligence. You have to do your own study, because it's your money, it's your responsibility. You have to do something that will work for you. You have to do something that, after analyzing it, watching all of the videos, we have more than 10 videos already on REITs. If it makes sense for you and it fits you, then go for it. But as I start discussing this and this does not make sense for you, by all means, you don't have to buy it. You don't have to buy every listing in the market. You only have to buy something that works for you and fits you. And by the way, if you want a deeper dive in all of this, if all of the things that I've been saying, terms and jargons, does not make sense to you, I have 5 books. They're all in the description below how to order them. You can order them via Shopee, and it can be sent to any part of the Philippines that Shopee has coverage from. And if you want to know also more about the basics of the market, I have 2 online courses, a Tagalog one with Chinkee Tan and an English one with Sean Si. They're in the description below. The whole goal of those online courses is to teach you the basics on how you can win and trade in the markets. And third thing that I'd like to mention is I have a lot of playlists from ETFs, REITs, CFDs, technical analysis, fundamental analysis, the basics of the market. Everything is in the description below via playlist form, or you can just hop over to my YouTube channel and then click playlist. We have tons of playlists for you with one goal: to help you and give you the right conviction in the markets. So I want to know, what's the best thing that you've learned about this? Did you stay up until the end? I also want to know, are you buying a REIT or not, based on what I'm saying, or based on the 3 videos that we've created already for REITs. And if this video gave you so much value, appreciate it if you could press the like, the thumbs up button, and share this to 1, 2, or 3 of your friends, so that we create an awareness that it's amazing to learn about finance and investing, so that we change the narrative that while we are here in this pandemic, this does not have to destroy your finances, but this can also, through proper investing, make your finances get even bigger, better, stronger. Please remember that when people are writing 2020 off, it doesn't have to happen to you. you can come out and you can use this time for your finances to be better. And I really do hope that this channel is something that's helping you, guiding you, and giving you the right information also to be able to trade the markets with confidence. Because again, I'll never stop doing this. I'll never stop sharing as much as I know, because I just want you guys to win, and I want you guys to invest, and I want you to trade the markets with confidence as well. So that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.